Tariffs. That seems like all people are talking about nowadays is tariffs. I think, in fact, I did a video last month about tariffs when he made the announcement, but it has not gone away. So here we go again. I'm in March now, still talking about tariffs because they actually got enacted. So in this video, what I'm going to do is talk about the impact of tariffs and how you can adjust your investment philosophy around those tariffs. So without further ado, let's get started. All right, so as I mentioned, I'm going to talk about tariffs this month. This is Coach Mike back with the Baltimore Stock Market Meetup group for the month of March. You guys know who I am. Here's my contact info. I'm looking forward to setting up that initial one-on-one appointment with you. If you got questions about how to manage your own portfolio, feel free to reach out to me and let's get the ball rolling. Who do I help? I help first-time investors get off the bench and get in the game. And if you are one of those experienced investors, I would encourage you to set up an appointment so that we can do an annual portfolio review. A lot of things have changed. So let's, just like you have an annual checkup with your doctor, let's do an annual checkup for your portfolio. I always start off the same way: with an investment in knowledge pays the best interest. My favorite quote, hands down, from Benjamin Franklin. I just want to throw out a few disclaimers here that this is not investment advice. I'm just giving a general presentation here. One of the reasons is that I need to know your risk tolerance, your financial situation, and a lot more things about you in order to give you financial advice. So this is just really my opinion on the market. There is an intersection between risk and reward that everyone has to encounter, and where you lie on that scale of risk and reward is totally up to you. But one thing I can say is that we always talk about guarantees. There are no guarantees when you invest. Typically, the more risk you take, the bigger the return, but also the bigger the loss. But the one guarantee I will say is that if you stay on the sidelines and don't take any risks, you won't get any return. That's the only kind of guarantees I'm willing to give out today. And lastly, I just want to say that some of the information that you'll see today is from third-party sites. All right, so let's get started. Here we go again, talking about tariffs, right? We talked about this in February, actually since the year started and since the election, right? It's all people have been talking about is tariffs and what's going to be the impact on tariffs. So back in February, he did make an announcement. It's going to have tariffs on Canada and Mexico, our two closest neighbors in North America, and 10% on China. Okay, so this is a little basic, but here we go. Tariffs are really a sort of a tax that the companies who are doing the importing have to pay. Now, they can do one or two things. They can eat those costs, right, which will have an impact on their bottom line. And if they're a publicly traded company, that's not good for their stocks, right? Or they can pass it on to consumers like us, which means we'll pay higher prices. Either way, somebody's got to pay these costs for the tariffs. Either company pays it and eats it, which will affect their bottom line, or the consumers pay it. Either way, somebody's going to pay that cost. So that's going to be a higher cost, which will slow down the economy. So my first, reaction is that how we treat our neighbors? Again, we're in North America. Canada and Mexico are our neighbors. Is that really how we're going to treat our neighbors? So back in February, you saw the reaction from the market, didn't like it, and that caused a reaction from him, which he gave them a pause. Okay, Canada, Mexico, I'll give you 30 days. Now, his claim is that this is just a negotiating tactic to bring them to the table to negotiate a even better deal. I don't know. I think he had second thoughts about it, but he gave him 30 days to, work out a deal. Nothing happened. So now, right, March 4th, tariffs go into effect. And what he did was actually increase it another 10%. So now China has a 20% tariff and still 25 on Mexico and Canada. He claims that he wants to see a reduction in the overdose deaths in opioids, which I don't know how you're going to measure that, right? But whatever. And what about addressing the drug problem in America of the addicts? You're attacking or trying to attack the supply, but what about the demand for the drugs? What about that? What about the addicts here? So it's just a smokescreen, in my opinion, right? But I'm getting off the topic, right? Because you're here to talk about tariffs and investing around tariffs. But I'm just saying, there's got to be a method to the madness. And what's the reason, the real reason for the tariffs on our neighbors? All right, so the second reaction we see, right? The markets don't like this one again. Monday and Tuesday, down, down, down across the board. All three indexes, both days down. This is not pro business. He's supposed to be the pro business president. This is not pro business. This is anti business, if you ask me, right? So, but wait, there's more. March 12th, going to have a 25% tariff on steel and aluminum. And then it just goes on and on and on. Like, when does it stop? When does it stop? How is this helping? That's really the question. How is it going to help business? All right. So since the inauguration, on January 20th, you can see what has happened. The Dow, the NASDAQ, the S&P 500, all three are down since his inauguration. Now, we knew about the tariffs before that, right? But it seems like he's ramped up the rhetoric around these tariffs, and it's just doing nothing but drive the markets down. Now, remember, back in 2016 and those years, his measurement, his way of measuring if he's doing a good job is, what is the stock market doing? Well, unless you're going to change the rules of your game, right? The stock market is not doing well based on your actions. Okay, so here's the thing. How do we adjust our portfolio so that we can get the best out of this, right? I'm going to say, look at US-based companies that provide a service instead of a product. Okay, so things like the financials, banks like Bank of America, Wells Fargo. I'm not saying that those banks in particular, but that's an example. Healthcare, right? We all get sick. That is recession proof. And then, of course, data centers, right? There is a growing need for data centers. All three of those are housed in America. It's a service, not a product. They're not going to get tariffs on top of them, right? Or if you don't want to go with individual stocks, look at some of the stocks, look at some of the ETFs and the communications ETF, the consumer staples ETF, or the utilities ETF. And here's what I mean. Stocks like Meta and Google and Netflix, you can clearly see that they are providing a service, not a product, and they're US-based companies. So that's some food for thought. XLC is the ticker for the communications ETF. Giving you guys some gems here. If you're looking at ways to adjust your portfolio, this is a great one here. Here's another one, consumer staples. These are the things that consumers are going to buy regardless of the price, right? We've got to shop at Costco. Well, we don't have to, but you're going to shop somewhere, right? Whether it's Sam's Club or Walmart or Costco or BJ's, right? Procter & Gamble with the soap, toothpaste, deodorant, shampoo. Those are things that are recession proof. Consumers have to buy those products. And remember, our economy is 2/3 based on consumer spending. So another great area, ticker symbol XLP, the consumer staples ETF. Throw one more at you. Utilities, right? We got to have gas and electricity for our homes, to heat our homes and power our computers and cell phones. So XLU utilities ETF is another great one. They're not going to get tariffs on top of our electricity. So it's three great ones for you right there. If you're looking at ways to adjust your portfolio, if you don't have some of these in your portfolio, you might want to take a look at adding those to your portfolio. Again, I'm just going to wrap it up here. Regardless of what you do, please make sure that your portfolio is diversified. I'm not saying you need to put everything in a communications ETF or the consumer staples ETF, but balance your portfolio in a way that not all of your eggs are in one basket. Speaking of eggs, right? How much are they now for a dozen? $8, $10, $12? I don't know. I lost track of how much eggs are. That was one of the things he promised, right? I'm going to bring down the cost of goods. Well, that has not happened. Just like you're going to make Mexico build a wall and pay for it. So a lot of things. You guys got to be able to separate campaign talk to what happens in reality once people get elected. Anyway, since the election has happened, you saw on the left-hand side here, a big jump in the enthusiasm for him becoming president. And then it continued on into January. But since January has been extremely choppy, is so volatile because every time he opens his mouth, the market reacts, and it's just choppy, a lot of volatility. I think I said this back in December and January that you should expect volatility. But since the inauguration, it looks like it's just been going down because of these tariffs, and it's just gonna be a trade war. So I don't know if there's gonna be any winners and losers. It's sort of like a divorce, right? Who wins? The lawyer wins. That's who wins. The lawyers win. So if you're an options guy, the options people will probably win in this kind of market. So lastly, make sure you monitor your portfolio. do the annual portfolio review with me. Check on your stocks on at least a weekly or quarterly basis and make adjustments. This is not a just buy some stocks and leave them there. You got to make adjustments. You got to monitor your portfolio. Things change, okay? As we can clearly see, things do change. All right. I want to say learning is a journey. It is not a destination. I've been doing this for a really long time, and I'm still learning new things all the time. So don't think you can take one course, watch one video, and know everything there is to know about investing. It is an ongoing process. This is Coach Mike signing off. I will see you guys next month for the next video. Thank you guys very much.